Welcome to CoinDesk Live. I'm Pete Rizzo, editor for CoinDesk. Today, Bitcoin is back at its 2019 high, so we're bringing you interviews with crypto markets experts to break down the hows and whys. Up now, to my left, Mr. David Nage, principal at Arca Funds, which applies institutional-grade asset management processes to crypto and blockchain investing. Welcome, David.
Thank you.
So we're talking backstage a little bit about the rally on everybody's minds. First topic I want to introduce, there's a lot of talk right now about it's different this time.
Right.
That was what went out on Wall Street Journal. That was sort of the headline.
Right.
Do you agree?
I do agree that it's different this time. What we're seeing right now from the institutional side and from the investment sentiment is that you're seeing things like Google trend searches, where they were maximized in 2017 during that retail rally, and right now they're basically just hovering around, in the lows. And so what you're seeing is that you're not really seeing institutional investors Googling Bitcoin and blockchain. They're talking to their counterparties that they've worked with for years that have been on the Wall Street that have now transitioned to crypto.
So you mean their interns are Googling it? That's what you're
they might be, but people that have known people, there's for instance like Greg Tussar, who's at Tugomi. He was at Goldman for 10 years plus, and I'm sure Greg is getting some calls from clients on the family office side and the institutional side that he's known for years. Fidelity is now launching their qualified custodial product, back in March, and we're hearing that they're getting lots of inbound interest from big institutional investors as well too. And so I think there are dominoes that are falling into place right now that are showing institutional investors and family offices that this is real. And as I like to say is that Bitcoin has been around for 10 years now, and I think a lot of people in the family office world and the institutional investment world are having this awakening. They're saying, wow, it's been around for 10 years. It hasn't just faded. It's not just a new hype thing. It's been around for a decade, and we've seen it mature. We've seen it grow. We've seen institutions start putting lots of money and effort into building platforms around it. Fidelity, again, going back, Abby Johnson commissioned Fidelity Labs around 2014. That's 5 years.
Right,
so that's not just the last 2 years as a reaction to the price movements. That is saying there is something here and we want to investigate it and we want to put investment into it.
So I guess the big question that I have, has institutional money actually gone into the market in your estimation? You said there was an awakening, people are taking notice. Is money from institutions in this market right now?
So I think there's two different stories. There's the institutional side and then there's the crypto side. The institutional side is starting to see that there are things on the global macro side that are very interesting to them. The U.S.-China war is definitely affecting things. You're seeing yield inversions.
U.S.-China war?
The trade war.
Okay, I was going to say, I missed that one.
The trade war. Yeah, hopefully we're not going to go into a war because that would be
I was like, I should have read the news this morning, I guess.
Go long Bitcoin if that happens. That's not investment advice. And so, basically, you have a situation where you have things that are happening in global macro. I think Hong Kong, the protests that happened there is also another awakening, that there are geopolitical issues that are happening and that people around the world might be looking for a new store of value that is digital, that can't be censored from different governments. And so I think that on the institutional side is awakening them, and they are starting to start putting in bets into the space.
So they are putting money into the market. So you think some of this was driven by actual institutions buying Bitcoin?
I think that there are institutions that are buying Bitcoin. I also think that there are institutions, from my knowledge, from family offices, that have been investing in this space since 2014. There are not many, but there are. There are 10,000 family offices in the world. But
I just find the word institutions is kind of like it's just this big
amorphous
word, and I figure like they're all just 30 years old, like everybody, like the crypto institutions, regular institutions.
I think institutions, we talk about institutions, I think you have pensions, endowments, you have family offices, you have institutions that are managing billions of dollars. I think if you're just someone who's doing a separately managed account or just trading some Bitcoin with a few $1 million, that's not necessarily institution. But institutions that are managing billions of dollars are starting to take a concerted look in this. And we can prove that. We actually do what we call investor calls at Arca. And we've done those for the last few months. Last month, we had a great number of people come in. This month, we had a 2x.
Investor calls is just like open anybody
open anyone, open to anybody.
I'll alert the news team.
Yeah. They're open to anyone. Actually, we had some people on CoinDesk, I think, participate.
Really? Okay.
Yeah.
Nice, yeah.
And we had a 2x return, twice as many people this time than last time.
Okay.
We also host summits for family offices. We did one in September of 2018, right before the price capitulation, and there was about 120 family offices that came. We did another one in April of this year, over 155 came. And so we're starting to see more people coming in. It's not just recycled people. It's new people coming
Right.
into the system too.
So I want to go back to like the differences between the 2017 market and today. Another one that I've noticed, or that a lot of people I guess have been commenting on, is also that the alternative cryptocurrency market is not particularly active right now. Is that something that you're looking at? Do you have personal feelings on how that might affect things?
Right. So we definitely look at Arca. We definitely look not just beyond. We look beyond Bitcoin. We look at some of the other alternative protocols. We look at what's being built. We look at different systems aside from proof of work to proof of stake to delegated proof of stake. We are seeing, and I also host a podcast, and I'm talking to founders on a weekly basis. They are going from testnet to mainnet. They are showing use cases. They are working with big corporations. Google's work with Chainlink just recently announced that. Microsoft announced with Ethereum. Things are starting to happen where corporations are saying, okay, there's this permissioned idea, and then there's this permissionless idea. Obviously with Libra, that's been something talked about ad nauseum. And so there's this idea of, okay, maybe we can look at something where it's in between. It's a little bit of private, a little bit of public, and maybe we can get some utilization out of that. And so we are seeing those cases in different protocols.
I guess when I look back at 2017, I saw as the big differentiator there is that money accumulated in Ethereum first, and then you saw a huge divergence in all the Ethereum coins.
Right.
And that money, it seems like, was reinvested in Bitcoin.
Well,
perhaps.
I think what happened is that you saw in the ICO craze, you saw a lot of those projects raising in Ethereum, and they would raise $30, $40 million in Ethereum. And unfortunately, a lot of them did not execute proper treasury management. They sat on it while the price capitulated down.
I guess what I'm asking is to get back to the all-time high, we're living in the shadow of the mountain now, to get back to 20,000, do we need to see a large sort of capital accumulation in alternative cryptocurrencies? Do you think that played a role in the past rally? Is that something you're looking at?
See, we look 5, 10, 15 years down the road. We don't necessarily look, say 6 months down the road. We don't believe in price projections.
Do you think it's going to be all-time high again in 6 months?
We don't really believe in, what we look at is we look at the fundamental drivers. One of the fundamental drivers that I look at specifically, also going back to the family office world, is the relationship between esports. There have been over $4.5 billion invested in esports in the last year and a half to 2 years from family offices and other institutional investors. What is the interest about esports? Over 400 million people are daily active users of games. Esports, in terms of the leagues that have been created, have more user readership and watching than, say, MLB and NHL. So you have more people that are watching esports than they're watching baseball games. And each one of those games.
That's kind of sad for me.
Well, I'm a Mets fan, so it's pretty
Red
indicative.
Sox,
Well, there you go. It's pretty indicative for me. So it's when you think about it, you have the population. You have 20 to 35-year-old people that are playing games every day. And what is in those games? You have in-game currencies. You have digitally native currencies. In Fortnite, you have V-Bucks. In PUBG, you have BP. These are digitally native currencies that can only be used to buy things in-game.
Right.
And so that population is trained and primed for digitally native assets like Bitcoin. And so as they become more involved in the economies at scale, are they going to go and seek out gold? I don't really think so. And I think that plays out in the next 5, 10, 15 years.
Let's talk about the price of Bitcoin for a second. Always a favorite topic of mine because it's kind of an amorphous thing that doesn't actually exist. So, the Bitcoin software doesn't really recognize a Bitcoin. All it recognizes is, these bits on the ledger. How do you explain what the Bitcoin price is to people? Has this changed for you over the years?
Right. There's been this narrative of blockchain, not Bitcoin. I like blockchain, but I don't like Bitcoin. And that harps to the fact that they don't understand the incentive models. They don't understand mining. They don't understand how Bitcoin has actually been printed and minted. I've had people say, well, why can't a miner just be paid in USD or fiat? And so they don't understand the intrinsic models of proof of work. They don't understand how a miner actually gets incentivized. They don't understand the necessity to actually incentivize a miner for the compute power and for the, solving the cryptographic puzzles. And so, understanding the price as it relates to understanding the mechanisms is something that is still a divide and something that we still talk to on a regular basis to those people about.
So to you, what does the price measure, or how do you describe it?
Well, we know that there are 21 million hard cap on Bitcoin.
Right.
We know that the halving is happening in the next few months. And so,
not until next year.
And it's the next few months. We're actually, we're getting into July.
I guess we can debate the terminology there.
Right.
But, yeah.
So it is happening sooner rather than later. I think we can agree about that.
Sure.
And so, I think, in terms of supply and demand, when you cut supply, and then you obviously continue to have demand, whether it's new demand or pre-existing demand. Economics basically says when you have lower supply and higher demand, what happens?
Well, when they ask, what am I buying? When they ask, what am I buying when I buy Bitcoin? What's your answer?
Digital gold.
Okay. That's your answer, is they're just buying digital gold?
Basically.
So you don't go beyond that?
And they're buying a hedge against geopolitical issues.
Okay, so you don't actually explain the technology of the software.
You get lost. They get lost in the technicalities of it. They want to understand exactly the utilization for it. Use cases is always where they want to start. What is this going to be used for? And when you can talk about analogies like imagine having a briefcase full of gold bars and you're going from Hong Kong to America. What's the chances of you being stopped by border security? Pretty high. And what happens if all of your assets are liquidated into those gold bars? You might have them censored and they might be confiscated. But imagine if you had that on your phone, or if you had that in a in a Trezor or something like that, or a ledger, and then imagine just being able to port that all the way around the world. And so the idea of actually having that censorship resistance, having the ability to port your assets. We talk about there's the internet, which was 1.0, which was the dissemination of information online.
You're right.
And then we talk about...
And that's how I talk about Bitcoin in the context of that.
And we talk about Bitcoin, we talk about crypto as the dissemination of assets online. The transfer of assets online. And that's kind of one of the things that we talk about, aside from the whole idea of digitized gold.
So when you're talking to them about gold, I mean, obviously gold is worth less than a Bitcoin. How do you explain that?
Well, again, it's gold has had a recent rally up to $1,400, if I'm not mistaken.
Yeah, I saw Peter Schiff tweeting about that.
Yeah, Peter has been talking a lot about that. In terms of the relationship between Bitcoin and between gold, you can continue to be mined. It doesn't have a hard cap. With Bitcoin, you have a hard cap, and there's the inflation side of it. And so, there is a difference between supply and demand. There is an infinite supply, hypothetically, of gold, and you can continue to mine and you can
really
find it.
like the gold analogy. It seems like a lot of investors do.
I think that resonates with them. And again, going back to the notion of...
Doesn't that obfuscate all the fact that, really what we're talking about is applying internet-based network effects to assets now? Doesn't that...
again, I think it's bifurcated. I think you have this notion of digitized gold, and you have this notion of transferring assets online. And I think they understand the gold aspect, they understand the transferring of assets online, they understand kind of the store of value. However, the store of value, when you talk to institutional investors and family offices, they always come back to the volatility. They say, well, it's very volatile. I said, how is it a store of value if it continues to price fluctuate? And so you get into a little bit of a bottleneck there talking about the volatility. And talking about how the volatility actually over the last 10 years has actually started to smooth out. Over the course of the last 2 to 3 months...
I mean, from that high.
Yeah, over the last 2 to 3 months, that's a different story. You've seen volatility pick up. You've seen actually calls getting more expensive than puts on the derivative side. And so you're starting to see more volatility come into the market recently with the recent rally. Right. But over the last 10 years, you have to really look at it from a perspective. You can't just talk about it now. You have to talk about what's happened over the last 10 years.
So earlier this year, a big narrative was market irregularities. There was a lot of talk about Tether, obviously the stablecoin that supports a huge amount of alternative cryptocurrency trading. There's a lot of talk about which exchanges have real volumes. Is this stuff that is diminishing the rally? Are people sort of discarding this? Like, what is your take on how people are responding to that?
I think it's actually a really good thing. I think, talking to other family offices...
It's good that there's irregularities?
No, I think that we're actually cleaning house.
Okay.
I've talked about this notion of a purge over the last year. And
Crypto purge.
Crypto purge.
Okay.
I think we go from, quantity to quality. We go to those institutions that are at the highest standards, that are actually, keeping track of all the information, of doing KYC correctly, of reporting those assets, and making sure that those assets are not eviscerated. The notion of having Quadriga happen again, when Quadriga happened, that was actually a really bad thing. And we were talking to clients. We were talking to clients about that on a regular basis. When Bitfinex happened.
But what's the delta on Quadriga between the average and the average crypto exchange?
It's sentiment. Yeah. It's really sentiment amongst the investors. They go back to this negative headline risk. They say, okay, well, this happened. And so, again, proof in the pudding that, this is all kind of a spoof, that there's a lot of irregularity, that there's a lot of scam. And so there's always this negative headline risk associated. And so each time that happens, it's obviously kind of a chip against the shoulder. And, it's a black eye to the industry.
Did you put money in the market when that Tether stuff was happening?
Well, I'm not going to, we can't talk about the timing of our investments, but,
sure.
That's we basically... With Tether, I think it's fair to say that our investment thesis is that it has been shown that the market uses Tether actively.
People want to move Bitcoin or dollars like Bitcoin, essentially. I think that's what Tether proved.
I think what Tether, our CIO, Jeff Dorman, talks about this a lot coming from traditional Wall Street. He remembers when he was on the buy side, he was buying convertibles on night capital, which was about to be taken under. They were going through a bankruptcy potentially. And he was buying those because he knew that the market needed Knight Capital for the instrumenting and the tooling that they provided to the market. Like Tether, we saw that there was a need and a purpose for Tether within the market, that the institutions and the buyers and the hedge funds out there use it on a regular basis.
And these would be like just the crypto side institutions.
Right.
Okay.
But you have
Going
over
back to that word institutions again.
you have over 500 hedge funds right now in the market, and you have billions of dollars that have poured into it. They are starting to look more like institutions.
Interesting. So maybe we should talk a little bit about the Facebook cryptocurrency.
Sure.
That was kind of a big deal. People are talking about
Just
it.
a little bit.
Do you think, you mentioned people aren't Googling, Bitcoin. They're a little bit more informed than that. How has Facebook changed their impression of the industry, in your view?
So the talking points that we've been issuing, a lot of people have been doing the same talking points, is 2 billion daily active users. In my opinion, is that if you have 2 billion daily active users who are now going to have access to a cryptographically powered wallet, they may, even if you do some sensitivity analysis and you say 10% of that 2 billion says, what else is there? And they say, okay, I have this now, I have this new crypto from Facebook, what else is there? If they even go to Google, we're using Google a lot today, and they search cryptocurrencies, and they find Bitcoin, they find Ethereum, they find some others. If only 10% of that 2 billion does that, that's 200 million people. And if only 10 or 20% of those 200 million people go and say, okay, I'm going to put $100 into Bitcoin, that number alone dramatically changes the market cap.
My question with the Facebook thing, though, is why didn't they just launch it? I mean, they could have just issued a cryptocurrency. So why go through if they knew that they were going to get the blowback on the announcement?
Well, they're a $500 billion market cap company.
They could have just, they announced something that didn't exist, correct?
Well, I think they announced that they are working on, if you read, obviously you read the white paper and as everyone else.
Yeah, but the question is why? I mean, they had total autonomy to do that. Nobody forced them to announce that they were working on a cryptocurrency.
I think I think David Marcus and the team, show that they actually love this idea of open networks, that they want, community to get involved. They want people to try the testnet, and we've seen people trying the testnet recently in the last few days. And so they want active community participation. And so they launched it with this notion of saying, come talk to us. What are we doing right? What are we doing wrong? And I think that in itself was pretty amazing.
How does that change the calculus for Bitcoin? Does it sharpen its value proposition? Does it augment it?
Well, it depends if you're a Bitcoiner, if you're someone else.
Are you a Bitcoiner?
I firmly believe in Bitcoin, but I also believe that Bitcoin is as I said, digitized gold. But I also think that the underpinning technology unleashes capability around society and economics that is unfound. That is we haven't seen it yet. Right. With Ethereum, you have smart contracts. You have other protocols that are using delegated proof of stakes, that are using sharding, that are using zero-knowledge proofs.
What's another project that you like? Just a sleeper hit.
I think some of the projects that we're monitoring because they're on-ramps are things like Lolly. Lolly has over 800 retailers on right now where you can go to Gap or you can go to CVS.
That's where you get rewards for
exactly, you get Bitcoin rewards. And I think that's an amazing on-ramp. I think another one that we're watching closely is Flexa. Flexa worked with Gemini, and now you can start using crypto to go into Whole Foods and buy food. Things that are allowing usability and portability of those assets are things, on-ramps, that I think that we're watching very closely.
But if nobody's going to spend it ever because it's digital gold, why do you care about usability?
Well, you have to, there's this notion of medium of exchange and then stored value. If something becomes a medium of exchange, then it becomes a stored value.
Yeah, but if Facebook is the medium of exchange, then how is Bitcoin a stored value?
We'll have to see.
Let's talk about the futures market. I think we brought it up earlier. Something that I'm curious about with this rally, obviously, last time Bitcoin was at all-time highs, CME came online. But we saw then a lot of shorting on the down.
Right.
Do you think that institutions, now that they have the power to essentially short the market, do they see 11,000, 12,000, and do they try to turn the market the other way?
I think some of the data that we've seen is that the CME just posted this morning is that we're seeing more shorts. And I think if you look at some of the data that we got this morning, that calls are very expensive and puts are cheap. And so
what does that mean for the lay?
I think you're starting to see people shorting pretty actively.
Percentage-wise, what's the basis?
I don't know what the float is right now. I'd have to look at that, but we are starting to see some data over the last few days that is showing that we're seeing more shorts to the market than calls, and so there's a possibility that people are going to start taking kind of percentages off of it right now.
Interesting. So you think that there might be some pressure on the price downwards coming?
Again, not speculating on price, but I think that people saw what happened in 2017. They saw a massive accretion in price. And I think a lot of people at that time learned, hopefully, that hodling is not necessarily the best way to do this. You can actually DCA in and out. You can take some percentages of profit. And so I think people are realizing that you have the ability to take profit from this market while not completely capitulating out.
What's your take? I heard somebody brought up over the weekend. I thought it was pretty interesting that the rally sort of coincided, or it happened exactly after the CBOE went offline with their futures offering. Do you think it was sort of a diminished amount of short offerings that played a role here? Or?
When you take shorts off the market, and one of the things that we talk about is the shorting capability in the market right now is not necessarily what we would deem institutional. And so, coming from traditional Wall Street and having those mechanisms and processes is something that we're used to. And we don't really see that in abundance within crypto right now. And so I think if you take something offline and you diminish the supply of that and the capability of that, you possibly could have some sort of a converse relationship there.
So obviously, price back, tension's back. A lot of people are talking about Bitcoin again. What's the silliest text you've gotten recently? Anything amusing?
There was a family office that I was talking to recently, and we were talking about crypto, and they don't have exposure to it yet. And I said, Bitcoin's been around for 10 years, and he kind of paused on the phone. He said, really? He said, it's been around for 10 years. And so there's, again, this notion that this has been around for actually a decade now. And so I think people are starting to get aware of it. We're also seeing other investors in the space that have been, very quietly getting into deals. The Witter family from Dean Witter actually invested in Silvergate, which is one of the only banks that banks crypto projects.
Right, sure.
And so we're seeing them slowly and kind of very quietly get into the space. They're doing this on purpose not to draw massive attention to it, but we are seeing evidence that they are starting to come into it, from the liquid markets, but more also from the venture capital markets.
Interesting. I guess last question here before we wrap it up. People talk about about Bitcoin as this new economic system. One of the things that I find interesting is I'm recently trying to explain or try to rationalize a conversation why most people think that the price of Bitcoin needs to be very high for the networks to succeed. What's your take on that?
Why does the network?
Yeah, why does the Bitcoin price need to be? Because you get the $1 million Bitcoin theory, right? That's sort of a popular thing amongst the bulls, right? That the market needs to be very large for people to use it. I guess how do you wrap your mind around that question?
Well, if you again use the gold analogy, you have $7.5 trillion in gold in abundance right now, in circulation right now, and so there's this notion of relative value where if you can say, okay, a percentage of people who are in gold, 10%, 20%, 30% in gold, start repatriating into Bitcoin, then you can obviously start doing the economics there. And so I think you have some potentiality of doing that. I have to also say that the valuation on a lot of these crypto assets, in terms of understanding price, this is all a moving target. Every other day someone's coming up with a new model. Chris Bernanke came out with it a few years ago with MP equals PQ, but you're starting to see real time
realized cap and all these
right.
things, yeah.
You're seeing valuation metrics and models coming out in real time. Whereas 2 years ago, again, during that rally, you didn't have any of that really. And so you're starting to see people really taking a chance to understand that. And I think that also comes in hand, again, talking about from 17 to now, you have infrastructure in place like news and research like you guys. You have Delphi Digital and digital asset research. You have platforms out there that are providing real-time news and information to really help with this information asymmetry and get people information real time so they can start modeling out better.
Interesting. It'll be interesting to see how that shakes out. David, appreciate you coming on the show.
Thank you, Pete.
Thank you.